Welcome to this deep dive into Berkshire Hathaway.
Yeah, quite a bit happening with them recently.
Absolutely. Today, we're going to unpack the company's first quarter 2025 financials.
Right. Look at how the numbers are shaping up.
And check out the latest analyst ratings for the Class B stock.
See what the market sentiment is looking like.
Plus, the big news, Warren Buffett's retirement announcement and the succession plan.
Definitely the end of an era there.
So stick around for that. And if you find this exploration useful, maybe consider liking and subscribing. It helps us bring you more of these deep dives.
We do.
Okay, let's start with those first quarter 2025 results for Berkshire. What's the headline?
Well, the main thing is operating profit came in at $9.64 billion.
Which is down from last year, isn't it?
It is, yeah, down about 14.1%. Last year's Q1 was $11.22 billion.
And what's the story behind that decrease?
It looks like it was mostly driven by weaker results from their insurance operations.
Ah, insurance. Any specifics there?
Yeah, they mentioned about $860 million in losses tied to those Southern California wildfires.
Ouch. Affecting Geico and others.
Exactly. Geico and other Berkshire insurance companies writing policies out there.
Okay. And what about net income? That figure often gets attention too.
Right. And that saw an even bigger drop, down around 64%, actually.
64%. Wow.
Yeah, it fell to $4.6 billion,
Yeah.
which is about $3,200 per Class A share. That's compared to $12.7 billion in the same quarter last year.
And that includes investment gains and losses, the unrealized stuff.
Correct. That swing in investments plays a big part in the net income figure.
Now, something else stood out, the cash pile. It grew again, didn't it?
It certainly did. Hit a new record, in fact. $347.7 billion as of March 31st.
$347 billion. That's up from what, $334 billion at year end?
That's right, $334.2 billion. So they're sitting on even more cash.
What do you make of that? Does it suggest maybe a cautious approach to investing right now?
I think it points that way, yeah. It sort of lines up with their activity in the stock market, too.
How so?
Well, they were net sellers of stocks again for the 10th straight quarter.
10th quarter. That's quite a streak.
It is. In Q1, they bought about $3.18 billion worth of equities,
Okay.
but they sold $4.68 billion. So selling more than buying, and the cash keeps piling up.
Seems like finding attractive places to put that cash is proving difficult.
It could well indicate that, yes. Finding opportunities that meet their value criteria might be tough in the current environment.
Let's talk about where their money is invested, in equities. Still pretty concentrated.
Oh, very much so. The top 5 holdings made up 69% of the equity portfolio at the end of March.
And those are the usual suspects. Amex, Apple.
Yep. American Express, Apple, Bank of America, Coca-Cola, and Chevron. Those 5.
But didn't they also add to positions elsewhere? I remember reading something about Japan.
Good point. They did increase their stakes in those Japanese trading houses.
Itochu, Marubeni.
Mitsubishi, Mitsui, and Sumitomo, yeah. They bumped those stakes up, some as high as 9.8% back in March.
Interesting diversification move there into Japan specifically.
Definitely noteworthy. Now, the quarterly report also touched on economic uncertainty.
Related to tariffs, I imagine.
Exactly. President Trump's tariff policies. They noted considerable uncertainty about the impact.
So they can't really predict the effects on costs or demand.
Pretty much. They said they couldn't reliably predict the consequences for product costs, supply chains, or even customer demand.
That highlights how these geopolitical factors are really filtering down, even to a giant like Berkshire.
It does. Now, looking at the actual businesses, it wasn't all negative. Some segments did well.
Like the railroad, BNSF.
Right. BNSF saw profit climb 6%, maybe boosted by higher consumer product volumes, perhaps linked to people buying ahead of potential tariffs.
Plausible. And energy.
Berkshire Hathaway Energy had a great quarter, profit up 53%, quite broad-based gains there.
But not everything was rosy.
No. The manufacturing, service, and retailing group, their combined profit dipped slightly by 1%.
What was dragging that down?
Mostly things like home furnishings and some other retailers facing, tougher competition and kind of sluggish demand.
So didn't the car dealerships do okay?
They did, yes. Berkshire's auto dealerships actually benefited from higher sales, so a bit of a bright spot within that segment.
Okay, let's shift gears then. What are analysts saying about the stock itself, BRKB?
All right, so based on 3 analysts covering it in the last 3 months, the consensus is a moderate buy.
Moderate buy. How does that break down?
It's 2 buy ratings and 1 hold. No sell or strong sell ratings in the mix.
And the price target, where do they see it heading?
The average 12-month target from those 3 is $519.50.
$519.50. But the stock was trading higher than that recently, wasn't it? Around $540.
Exactly. The last price mentioned here is $539.80. So that average target actually suggests a potential downside of about 3.76%.
Interesting. A bit of caution from analysts, perhaps. What's the range on those targets?
The high forecast is $557 and the low is $482. So still quite a spread.
How have those recommendations trended over time, say over the last 6 months or so?
Looking back from August 2024 to March 2025, the buy ratings have been pretty consistent.
Okay.
The hold ratings have fluctuated a bit, but have generally been present alongside the buys. So generally positive, but maybe not wildly enthusiastic across the board.
What about earnings estimates? What are they expecting for the next quarter?
The consensus EPS estimate for BRKB next quarter is $4.72.
And the range around that?
It's between $4.45 and $4.99.
And how does Berkshire usually do against these estimates?
Historically, they've got a pretty good track record. Over the past year, they've beaten EPS estimates 75% of the time.
That's solid. Better than their industry peers.
Yes, it says they've outperformed their industry in that respect.
And sales forecasts. What's the outlook there?
For the next quarter, the forecast is around $90.83 billion in sales.
Big number. What's the range?
Ranges from about $81.6 billion on the low end to $97 billion on a high end.
And their track record on hitting sales numbers.
Even stronger, actually. They've beaten sales estimates 100% of the time over the past year.
Wow, perfect score there.
Yeah, again, outperforming the industry. It suggests, pretty robust demand across their diverse businesses.
Okay, now for the topic that's probably on everyone's mind, Warren Buffett's retirement.
Yes, huge news. He announced he intends to retire as CEO at the end of this year.
After how long? It feels like forever.
Pretty much. He's been CEO since Berkshire was formed back in 1965. That's 6 decades. An incredible run.
Truly legendary. And the successor is confirmed.
Yes. Greg Abel, who's currently the vice chairman looking after the non-insurance side of things.
Abel. That name has been floated for a while.
It has. It's pending board approval, but he's the designated successor. And Buffett made a point of saying he won't be selling any of his Berkshire stock.
That's a significant signal, isn't it? Shows his ongoing confidence.
Absolutely. Confidence in Abel and the company's future. It really is the end of an era, though, and the start of a new chapter.
Did Buffett comment on anything else significant recently, maybe at the annual meeting?
He did. He talked about tariffs again, called them a big mistake.
Strong words.
Yeah. He also said trade should not be a weapon and that it could be an act of war, expressing some serious concerns about global instability.
Did he mention President Trump by name?
No, he didn't name him directly, but the context regarding current trade policies seemed pretty clear.
And did he address that huge cash pile again?
He did. Basically reiterated that they expect to find good investment opportunities eventually.
But not right away.
Not necessarily immediately, no.
Yeah.
More likely within the next 5 years, he suggested. He really stressed the importance of being patient, avoiding impulsive moves.
Classic Buffett philosophy. Patience is key.
Exactly. It's a core part of how they operate.
Was there anything else notable from the meeting?
Well, he gave a shout out to Apple CEO Tim Cook,
Oh, really? In what context?
acknowledging Cook's significant contribution to Berkshire's own financial success, given how large that Apple stake is.
Right. Highlights how important tech has become, even for Berkshire.
Definitely. And just the meeting itself, the Woodstock for capitalists, as they call it.
Still drawing massive crowds in Omaha.
Tens of thousands, yeah. Still a huge event. Apparently Hillary Rodham Clinton was even there this year.
Wow. It really underscores Berkshire's influence and the interest it commands.
It really does. So wrapping things up.
Yeah, let's try and summarize this deep dive.
Okay. Berkshire Hathaway is navigating a tricky economic landscape. You see the impact of trade uncertainty.
Right. Reflected in their commentary and maybe some business segments.
But they're doing it from a position of real financial strength, shown by that record cash hoard.
And then there's the massive transition coming up. Buffett retiring after 60 years.
With Greg Abel set to take over. A pivotal moment for the company.
And the analysts. Sort of a cautious optimism, maybe. A moderate buy, but with a price target slightly below recent level.
That sums it up pretty well, I think. Hopefully this overview gives you some valuable context.
Definitely. So, as we conclude, it's worth considering what these shifts at Berkshire, the financial caution, the leadership change, the navigating of trade issues might signal for the wider economy.
Good question. And how might it influence your own investment thinking? Something to mull over.
Indeed. Thank you for joining us for this deep dive into Berkshire Hathaway.
We hope you found it insightful.
And please, if you did, consider liking this and subscribing for more analyses like this one.
Thanks for listening.